Hi, welcome once again to yet another interesting IPO series. This time it is Zomato. So yes, Zomato has come up with an IPO which is opening on 14th of July and the issue will close on 16th of July. So let us see as to whether we should be subscribing for listing gains, whether we should be subscribing for long term, whether we should be avoiding this. So I'm going through this IPO note of Zomato. So everybody knows Zomato is a online food delivery app, food services app. In terms of value of food sold, connecting customers, restaurant partners, delivery partners, it is the leading online food delivery app. Now, as far as the brand is concerned, it enjoys the first mover advantage and it has built a strong brand name for itself. And as far as the mobile application downloads are concerned, it is the most downloadable app in the last 3 financial years as per the Red Seer survey. During financial year 21, 32.1 million average monthly users visited Zomato's platform, of which 6.8 monthly transaction users placed transactions. It is present in 525 cities in India with almost 1.5 lakh active food delivery restaurant listings and 1.7 lakh active delivery partners as of financial year 21 end. As per the Red Sea, Zomato has consistently gained market share over the last 4 years to become the category leader in terms of gross order value. Now, why it is important to know all these things? Because this Zomato is a startup and it's one of its kind IPO where a startup is getting listed, and it's very difficult for us to judge as to in terms of its valuations, in terms of its financials, in terms of its profitability or losses, whether this IPO on listing would give us listing gains, whether this is a long term buy. So you should understand the business model first and then decide whether you should be applying for this IPO or not. And that is why we're going into the details of this IPO, or rather, we're going into the details of the business model and what are the usages or what are the categories Zomato has, how does it earn its money. So we'll cover all this in the next 5 to 10 minutes. So keep watching. And at the end of the presentation, we will also give our view in terms of whether you should be applying it or not, and if you apply it, whether you should be applying it for listing gains or for long term. So please hold on for the next 5-10 minutes and keep watching. It's an interesting study which we have come up with. So we talked about the monthly active users, monthly transactional users. We'll also talk about the issue size. It's the issue size of this IPO is 93.8 billion, out of which fresh issue is 90 billion and offer for sale is 3.8 billion. One of the major stakeholders, approximately 18% stakes are held by Naukri.com's parent company, which is InfoEdge. InfoEdge invests in brands like Jeevan Sathi, 99 Acres, Naukri.com, to list a few. So it's a listed company already. Many of you already must be knowing that. So it will be offloading its stake by 2 to 3%. Other than that, all the stakeholders will remain as is. So it's mainly the fund which will be collected will be used for organic, inorganic growth purposes. It already has approximately 8,000 crores, and through this IPO, it will be raising another 9,000 odd crores. So it's a cash-rich company. In terms of its burn rate, it will have 8 to 9 years of cash flow, easy cash flow. So that doesn't really bother us. However, few things on the valuation fronts, if you want to look from financial year 18, 19, 20, 21 onwards, the revenue has been growing at a phenomenal rate, barring the last financial year because of the obvious reasons of pandemic. People did not have that much of, you can say, active sense to order food. However, now on the vice versa front, people have got used to using online applications, and hence the opportunity lies ahead in terms of the online application usage and food delivery online users increasing. So financially 18, 4,660 million, then revenue almost trebled to 13,000 and then doubled to 26,000, and in financial year hovered around 19,900. So the growth in the initial years was phenomenal, almost twice, then almost 3 times, then twice, and then it dropped by marginal 23%. But this should not be taken too much into impact. This is a concerning factor, but that is how startups, you can say, initially make users and then later on they become profitable. So we need to hold and wait and watch as to what Zomato has in play for the investors. So the profit, actually, it's a loss-making company, almost 1,000 crores, 1,000 millions in the first year, then 21,000 in the second year, 22,000 in the third year, and then it substantially got down its losses to 4,000 odd. Earnings per share is minus zero point 0.1, minus 2.8, minus 2.9, and minus zero point 0.6, again because it's in losses. In terms of, you can say, when we talk about such startups, we should be taking into enterprise value by sales, which is a valuation parameter for startups, particularly who does not have earnings. So we can take the enterprise value by sales as a valuation matrix to judge whether it's a overvalued or undervalued proposition to invest in. So in the first year, financial year 18, it was 127, then it got down to 45, then to 22, and then 25. So overall, a costly bet to enter into, and when we compare it with peers globally and locally, it again, the EV by sale stands to be a very, very costly proposition. But the good part or the exciting part is that the number of users it has locally and globally is one of the leading numbers overall. So these are few of the global comparison in terms of the market cap, in terms of the enterprise value by sales, enterprise value by EBITDA, that is earnings before income tax, depreciation, amortization, price by book value is still decent. So these are few valuation parameters. On the valuation parameters, it does look costly. About the company, just to give you some sense, 2010 it started as Foodie Bay Online Services Private Limited by the founders. Probably it was more of an intranet services. Then when the traction increased, they decided to go on the internet, and then they published their website by the name of Foodie Bay Online Services, and they used to collect reviews, and then they thought that it is generating traction and users are repeatedly coming. That is how Zomato was formed. So they wanted to form a name which is linked to food. So Zing plus tomato joined together became Zomato. That is how Zomato was named. As far as the two core businesses they are into, one is a B2C and second is a B2B. B2C, everybody knows, food delivery and dining out. You can book tables, you can order food online. B2B, they have something called as a hyperpure model, where they act as a middleman between farmers, organic farmers, and the delivery partners, the restaurant partners they have tied up with. So they help farmers to grow organic food, and then they source this organic food from the farmers, and then they deliver that to the restaurant partners, and then they tag them as hyperpure, so that all the foodies who are organic conscious can actually, or who want to have healthy food, can actually order from the hyperpure restaurant partners. So there is a different tag given to those partners who order, who are a partner to this Zomato business, which helps them to source from the farmers, and in turn they give that food to they ensure quality of food, and then they give it to the restaurant partners, and then the end consumers can order. So this is a big, you can say, business model for Zomato. Also, they have a subscription-based model, which is Zomato Pro, in which it's a loyalty program, in which if you go to you also get points, as well as you also can order a free drink. So I believe many of us have already used Zomato, so I need not explain that feature in detail. Many of us would have experienced that benefit when we enroll for Zomato Pro. So these are few of the, you can say, offerings: food delivery, dining out, Zomato Pro, Hyperpure, as we just discussed. As far as the users and the operations and financial metrics are concerned, monthly active users, monthly transaction users in millions from financial year 19, 20, and 21. So it had a good jump between financial year 19 and 20. 21, as I said, because of the pandemic, there was a decrease in the sentiments, and people did not order too much of food online because of they were health conscious, or they were conscious because of the COVID reasons. Active food delivery restaurants have been increasing from 94,000 to 1,43,000 to 1,48,000. The gross order value has been increasing from financial year to financial year 20. Financial 21 was a dip. Year-on-year growth 100% and less in this year 15% has been decreased. Similarly, orders in terms of numbers in millions 191 to 403 to 238 has been decreased. Year-on-year growth 111 and then decreased to 40%. All this is as per the red herring prospectus which we have read. Uh, some charts in terms of the food delivery gross order value which we spoke of. This has been increasing in this fashion from financial year 18, 19, 20. It has been a straight run up. Financial year 21 has been a decrease. Uh, in terms of the Zomato numbers versus the industry numbers, Zomato is way higher, and that is where we see a potential in this. In the market share, the Zomato market share is much higher than the industry average. In terms of the total income inclusive of delivery charges, it has been increasing barring the last 1 year. The EBITDA losses, the earning before income tax, so it was bad in 2019 and 2020, but in 2021 it has significantly improved its losses, although it is a loss-making company still. Per unit economics has improved. Commission charges, customer delivery cost, discount, variable cost, contribution profit loss has been substantially decreasing from year to year basis, which is a positive sign. Food delivery business has recovered from the negative impact of COVID-19, which we have been noticing from the last few quarters in terms of the gross order value. The contribution margin has turned positive since last quarters, which is again positive value, a positive contribution or a positive proposition to look at. We've already talked about these segments, about the industry. Basically, it is a fast catching industry. People are wanting to order, use online applications. People are getting used to, and when we compare ourselves with the global peers, we still have lots to catch up in terms of using online services, and that is where you can say the profitability or the growth lies to invest in this stock. We are almost like 8 to 9% of 8 to 9% contributing to the online food place, whereas in the United States and China, they almost contribute 47 to 50% and 42 to 45% to the food services industry. So that is where we have to catch up, but that is also you can say a growth perspective, which where we see value. Large headroom for increase in food delivery or adoption, as we said. Basically, number of active users will increase as in when India starts using more and more applications. The other you can say the other person who's into delivery app or delivery food delivery is Swiggy, but it's not a listed company. uh, on the risk and concern front, so it has been incurring substantial losses as we just spoke, but that is how startups work. So that is something which we need to look at in terms of number of years coming, whether it will gain traction and whether it will turn profitable or not. The third wave is a concern for each and every industry, so that is a common concern. The network partners, the relationships should be strengthening with time. That is one area which one needs to look at, whether they are able to maintain relationships with their you can say network partners. Brand equity, maintenance of brand equity is very very important. We saw in between where a Zomato delivery person was caught eating food or maybe hitting somebody, so all these things come in news and they spoil the reputation of the brand. So that is something risk and a concern. uh, Online food adoption, whether it will pick up or not, that is again a concern. Zomato is an online technology platform, so it needs to continuously innovate and develop its platform to remain competitive and attractive. And the cost of switching between offerings is low, which could have a material adverse impact on its operation. So they need to also improve their margins. So these are few risks and concern which we could talk about on the financials. Uh, these are the net sale numbers. So again, financial year 21 has seen a dip in all these cases. The losses, EBITDA is into a loss, earnings are into losses, the profits are not there, so it's a loss making company. The balance sheet in terms of the net worth, it looks strong. It almost has 8,000 crores in its balance sheet, so that is a positive sign. So and they will be raising another 9,000 crores. So almost 17,000 crores they will have in their books, which is more than sufficient to sustain for the next 8 to 9 years, even if they were not to turn profitable. So that is a plus point. The key ratios, EPS we've talked about, the valuations we spoke about, return on equity, all these numbers do not look good as such, but we'll have to ignore and we'll have to give them the advantage of being a startup and then being listed, and that is a wait and watch game. But it's important to show all these figures in black and white to the viewers, and that is why we're showing you. So overall, this is about Zomato. Uh, our stance, if we were to talk about, so we give it a subscribe for listing gains, and then probably if you were to, you can expect, as per our estimates, you can expect 20 to 30% listing gains. The exact numbers we can reveal on the second, third day as per the gray markets, that whether it can turn out to be 100% bet or not. But it seems tough because somebody who's reading about the financials, they may not look very, very flowery, or they might not look very good as such. But however, there is a hype of Zomato. That is why people will subscribe, and it will get oversubscribed for sure. On the 14th of July, this issue opens and closes on 16th July. We can talk again on this IPO on 15th July to give you an exact status whether you should be applying it or not, and what expectation you should have as far as the listing gains is concerned. As per my estimates, for the for the time being, I guess it should hover between 25 to 30%. If we are lucky, we can even cross 100%, given the hype around this application and the number of active, you can say, subscriptions which we receive for the IPO. So from our sides, a subscribe for listing gains and not for long term. We can wait and watch the story to unveil in terms of it getting profitable, and then stay invested for long term. So as of now, Zomato, a must subscribe for listing gains, given the hype around it and the first mover advantage this app or this company enjoys. So that is it for the time being. Obviously, you need a demat account for applying for the IPO. So in case you do not have a demat account, we generally leave a link in the description, comment box, or wherever you're watching this video. You can search for the link, click on it. It's a do-it-yourself demat opening link, demat account opening link. You just need to apply. Click on it. Apply for the demat account opening by uploading a PAN card, Aadhaar card, cancel check, and within 2 to 3 minutes your account gets active and you're ready for applying for the IPO. In case if you need assistance in applying for the IPO, we also leave our WhatsApp numbers, email IDs, chat links where you can click and chat with any of our team members, and we'll be happy to help. So thank you so much for the watch. Have a great day. Happy investing. See you. Bye bye.